Hope everyone's doing well. Welcome back to another lesson. So, today's lesson is about time in the system, and we're going to cover quite a few things. So, today I'm going to introduce something to you guys, a new technical aspect, and we'll be going over, some of the psychology and system based things that I mentioned, optimizing everyone's system. So, cool. Let's get into it. So, the first concept, some of you I think have actually heard of this, seasonal tendencies. It's something that ICT touches on, the financial quarters, and I'd like to touch on the holiday season and this current time of year, why I'm not trading. Of course, I've spoken about already, but we'll get more into it. So let's start off with that. Okay, so I've marked these quarters out, right? We've got December, March, June, September, and then again back to December and starts again. So cool. These are the financial quarters we consider, and let's look at them from a technical perspective, right? Let's just look at these candles. Now, I'm not going to say where it is at the moment, but this is, the midpoint around here. That's the midpoint of the quarter. This is the midpoint of this quarter. Getting midpoint of the quarter. Midpoint of the quarter. Midpoint of the quarter. So now, just looking at these few, that's about 5, I think. What do you guys see? Okay, cool. What you should notice is that in the middle of each of these quarters, a retracement happens. It's offered. Let's say for this one, right? We have this retracement that occurs around the middle. Now this seems basically pretty much bang on in the middle. We get a retracement, then we get that move higher, right? Again, this isn't, exactly perfect, but close to the middle of the quarter, we actually get this switch in direction, and then we get this move lower. Same here, around the middle, retracement, move higher. Retracement, move higher. Retracement, move higher. Retracement, move higher. Now, what you should notice about these retracements, right? They're followed by a move in the macro direction. Now, the macro direction for the DXY for a while has actually been bullish. As you can see, retracement, move higher. Again, and only this quarter we've had somewhat of a switch. This time I would consider the retracement has actually been to the buy side, and now we've delivered lower. Now let's go back. Let's look at one more thing. Okay. What is happening when price is going into these new quarters? It looks like somewhat of a consolidation here, right? Definitely a consolidation here. Somewhat of a consolidation. Most definitely a consolidation. Consolidation. Could consider this a consolidation as well. And of course, now we are getting into a new quarter, so we have to let this price action form. But, it is possible that this could be somewhat of like a downtrending consolidation, very tight-knit price action. So, where am I going with this? Right, cool. This is a part of time and price theory, right? We all know this. The algo functions on two things: the algorithm, time and price. Very important. This repeating pattern, this repeating behavior of a move in the middle, a consolidation at the end and start, move in the middle, consolidation and then start repeatedly. First of all, to you guys, should be, should cement that idea of time and price with the algorithm is repeating, is fractal. Right? Because we see these patterns on other time frames too. But it should also, make you realize, okay, cool. When should we really actually be trading? When should we be in the market? Should we be in the market when it's consolidating like this? When it's consolidating like this? Or should we be getting in these expansions? right? Think back to the daily candle. A daily candle typically starts with what? Consolidation, right? Asia range. Then we get a retracement, a move in one direction, followed by expansion in the opposite direction. Now, what have I always taught you guys to trade? We wait for the contraction, then we try and aim to get into the expansion, right? Now, it's very similar with these quarters. We don't want to trade these consolidations. We want to be trading these expansions, right? When you're trading here, it's lower probability conditions. So that is the first aspect of time and price we need to consider into our system and our trading. Okay, so the next point I want to discuss, right, based on the actual title of the lesson, is when do we trade? Now, when we trade is a very simple question, during the day, during London kills on whatever, cool. That is one reference to time. That is a daily reference to time, right? Just as I showed you guys, quarterly shifts. Let's think about where we are in the year. So with the year, right, from a liquidity perspective, when is the most liquidity going to be in the market? Probably not during the holiday season when all the market participants are on holiday. Trading activity is heavily reduced. And, if we compare that to, let's say, quarter one, quarter two, it's a bit of logic, it's a bit of common sense. Which one makes more sense to trade? This is why we do not trade. Some people don't trade November at all. I barely did. Some people definitely don't trade December. And also the start of Jan. So that is the first big reason behind it. Just a bit of common sense. The second thing I'd say is from a personal sort of sense, building your system and kind of just being humans. Everyone takes the end of year time to, kind of reflect, look back. I think that's a very good thing. I don't think it's like, oh, the year's finishing, let's try and squeeze in as many trades as possible. We don't need to do that. That's not necessary. And as I just showed, November, December is the start and end of a quarter, a quarterly shift. So as I showed, there was consolidations typically at this time of year. So is that what you want to be a part of? Your answer should really be no. So, we don't really want to be trading those consolidations. Once again, we want to get in line with the expansion. The next thing we want to consider is the time of month. So if you're watching this video, you've probably seen my recent weekly commentaries where I speak about the December contraction. And I keep banging on about it. That is my reference to the monthly candle, right? All of these things I'm speaking of, we can refer to them as the candle. When I taught you guys contraction and expansion, what did I show in the video? I showed you a candle, right? Had it drawn out. I explained open, high, low, close, open, low, high, close, depending on, it was bearish or bullish. Cool. Time of month. Are we in that contraction? Are we in the wick? Is a good way to look at it. Are we within the actual candle? The time of the week. And we consider this every week, which is good. I'm assuming most of you have picked up that habit. And we understand, once again, we want to get in line with the expansion. We want to be trading the days between where the high of the week is put in and between where the low of the week is put in. So I really want to trade outside that, ideally. The next one is time of day, right? So I get a lot of questions about this one. I think this one is very, very, subjective. It comes down to a lot of things. And this is why we are talking about, optimizing systems. Time of day. London open kills on, New York kills on, and London close kills on. The 3 times to me that are viable to trade. I don't trade outside those hours. I don't trade Asia. Is it possible? Yes. To me, is it worth it? No. Lower probability. I want to be in the market when there's high liquidity. There's a quote. The quote says, velocity wins all races. Go test it yourself. Price action outside the kill zones versus price action inside. what seems more, alive versus what seems more dry and slow. Pretty obvious, right? So that leads me on to my last thing, back testing. So what's the whole point of this video? This is what I'm kind of, building down to. Everything that's in this video can be tested, and this is how I would go about it. So step one would be to make a spreadsheet. This is what we want to do. Let's say you have a model in mind, right? You're going to build a set of criteria first. What's our criteria going to be? What days do we want to trade? What sessions do we want to trade? Right? These type of things to start with. Then it might come down to, which seasons are we ruling out? Let's say for me, I'll take out, let's go with the second half of November, all of December, and the first half of January. So 2-month period. That's just completely, taken off. And then now I have a model and I can test it over 10 months. Right? It would have been 12 minus the 2 that I don't trade. Cool. Now, what do I consider a model? Right? There's really just two things, specifically two movements I will consider as trades: the market structure shift and OT retracement. So how do I go about trading these? This is how I would backtest it. I would pick one session, right? And even with that session, we now need criteria. So for example, I trade London Open Kill Zone, I wait for a market structure shift, and then I get in a trade. Now, what do I trade off? I take my trades off a breaker block if the breaker block is in a discount or a premium respectively, right? Cool. So now we have that criteria. So what are we looking for? Okay, yeah. I'm going to trade Tuesday, Wednesday, Thursday, right? So this is what we do. We go back, we find every Tuesday, Wednesday, Thursday, we go to, potentially a 5-minute, 3-minute intraday chart, London Open Kill Zone, find the market structure shift, find your breaker, place the trade, record what happens, right? Record that data, put in a spreadsheet, and the way you should input it, right, should be along the lines of, okay, this is the day I'm trading, for example, Tuesday. Set a trade. Would the trader win? Yes or no? Pips won potentially, or whatever. Then at the end of it, you should have, a big spreadsheet. The pair you tested on, now the days, the model you used, and whatever. So cool. How do we actually use this data now? Well, everything in trading to me is data, right? Everything I tell you guys, you can go test, because what is testing? That is proof. That is proof of all the statements I make. Everything I tell you, I say, price does this, that. Does the price action back it up? It should. So this is the way you use the data. What we can now do is we have data recorded for separate days. Tuesday, Wednesday, Thursday, let's say, for example, right? So when you have a spreadsheet, what we can do is actually use something called lookup tables. I may make a tutorial on this. It's not hard. Just, you can YouTube it. It's very easy to learn. And what we can then do is say, okay, cool. Over this trading period, all the trades collected on the Tuesday, this was their success rate. All the trades on the Wednesday, success rate. All the trades on the Thursday, success rate. Right? And now we can also look at as a whole. Oh yeah, over the year, the success rate with this specific model following this criteria, the win rate was, let's say, 78%. Pretty good, right? But let's look at this now. If we take just the Tuesdays, where the model fits the criteria, we take the trade, the win rate is 87%. On a Wednesday, it's 64%. And then on a Thursday, it is, let's say, 81%. So what conclusions can you draw from that data? Right, be very systematic and methodical here. You know that you're taking more losses on Wednesday than any other day, trading that model. So what can you do with your Wednesdays? cut them out, right? And what happens? Your win rate goes a lot higher. Now, with this model that I'm explaining, it is very, very subjective. And what I mean by subjective is, right, now you know that this model works on a Tuesday and a Thursday. You kind of had to sit there and ask yourself, is that, enough? Cool, everyone should have a lot of discipline. Everyone should be, very sensible when it comes to trading, but we're not. Some people have the urge to be in the market very often. They need to have trades every day. So it's like, okay, let's explore other models which, potentially show up a lot more often, or, remove a bit of criteria, then rerun the back test and see the hit rate, see the difference, right? For example, let's say currently we had 6 bullet points. A trade has to meet all 6 bullet points for you to take it. Your win rate is, I don't know, 84% in total or something. You take one of the criteria out, your win rate drops to 78%, but the model shows up almost every day, right? If we're thinking about just capital and how much money we can make, the 78% might possibly be much more viable to trade for a lot of you. It would make a lot more sense from a money perspective. So what you guys should realize here is what I'm doing is, first we collect the data, we build a criteria, we decide time of day, time of week, time, whatever. And that's going to be based on more than just one thing. It's not just, oh yeah, we trade the expansion. Yes, we trade the expansion. But if every Tuesday currently, I don't know, you work somewhere and you're not going to be able to attend your session, then don't include it in your backtest, right? If you can only trade properly, be in front of your chart for the whole kills on Wednesday and Thursday, then only, test Wednesday and Thursday, unless you can, shift things around, whatever. But the genuine point that I'm making is it's going to be very personal to you. Your system is your system. You can't copy someone else's system. You really have to build it around yourself, around your schedule and your personality. That's a big one. It has to be a mixture of both. Of course, you still have discipline and whatnot, but like I just explained, everyone's different. And as you're learning, you're gonna have to cater to yourself and make things work that way. So what I've given is one example of a backtest. If you guys need any more guidance with that, of course, let me know. But that is how you can run your backtest. Build your criteria, make a spreadsheet, collect the data. Once you collected all that data, compare it, use it, come to a conclusion, refine it, go again. Simple when you're very methodical about it. But yeah, thanks for listening, guys. Any questions, as usual, please just drop me a message.